Hey guys, hope you're good. It's been a long time doing any kind of YouTube content. There's been a lot of learning. I'm sure there is. It's been over 2 years that I've started this channel, but I was not able to uh, post content constantly. But yes, I've been learning every day and something new, and then here I am. Let's quickly look into the Nifty. What is in the plan of action for tomorrow? Uh, what has happened today is dramatic, and it's been very much predictable for any seasoned trader. And I'm sure the retails must have been stopped out here, but there is a very potential opportunity if you look at it, because there has been no new low that has been formed after the opening. So that was in itself an opportunity to take a long position in the morning and then stay until the end of the day. Maybe, partially booking profits is always part of the game. But for a setup like this, I'm sure, you can stay back until end of the day. All right, so let's look at the data in detail. Let's only talk about Nifty and what is in the plan of action for 30th of July, that is tomorrow. So let's look at the data. So here is what different types of participants did. The client, DI, FII, Pro. So if we sum it up, client has taken more of a long position, and then DI also has taken a long position in the index futures. We'll generally talk about the index futures, so I'm not being very specific in this video that I'm talking about index futures. So let's only look at index, especially Nifty, in our channel. So let's look at it in that way. Client has taken long positions, DI has taken long positions, and if you look at the FI and pros that we consider to be the primary players who will be able to drive the markets because they have enough systems and they have enough capital to drive in the market, right? So if you look at it, FIs have taken long positions, or this is the participant wise volume. This is not the open interest. There are always two set of data that is available end of the day every day. One is participant wise open interest, and then participant wise volume. So it is up to you whether you want to follow the volumes or the open interest. But again, it is not just about these numbers, but it is more of a psychological readiness is what market generally needs, right? So if you look at it broadly, there are almost 2 lakh long positions in the call side, and then puts have been shorted by the players, the major market participants, the FI and Pro. And no wonder client or the retailers have taken a short positions there in the call. So it is evident that we get to see the market on a bullish side. However, we cannot just be constant, or make draw conclusions before the market opens, because the market is full of surprises, and opening makes a lot of difference. So let's look at the chart now. Let's say we will talk about three different possibilities, as in what if the market opens gap up, what if the market opens neutral, what if the market opens negative. All right, so those are the three views that we'll be looking at. Okay, so here we are looking at the weekly Nifty chart. There's been a consistent fall, and then here we are at the spinning top, or bottom. All right, it is indecision in the market, to be precise, if we put aside the names of the candles. All right, so let's break it down. There has been a consistent fall. So 1, 2, 3, 4, and fifth week we are able to see market red, especially the Nifty. And then if we look into it in a monthly chart, there has been a bearish engulfing pattern, very evidently available there. But there are still 2 days, through trading days left in the month, so we have to be very much vigilant. And as long as Nifty is below this level, which is 25,126, there is no way that we'll be looking at a long-term long positions on the bullish side. So there are always opportunities to capture market on a very short term, and it is always the very short term vision that we must have for especially for the Nifty, any index for that matter. All right, so we're looking at the 15 minutes candlestick pattern on sensible. So I generally look at the sensible because it also has an option to look at the open interest. Changing the open interest is something that I'm very much interested in to keep constantly tracking. So it is always available. This is free of cost for all the zero the subscribers and other brokers also. So I would request or I would recommend this platform for chatting. Right, so let's look at what happens to the market if it is opening neutral, anything close to this zone, which is 24,800 plus or minus 20 points. Hands down, you can stay bullish because there has been almost 2 lakh contracts pointing out towards the bullish positions of FIS and pros. So you can be confident, and you'll be able to take bullish positions right in the morning. When I'm saying bullish positions, I would certainly recommend selling a put instead of buying a call, because if you have to buy a call or long in the options, you have to be very much shrewd, and I'm sure you will probably not be looking at this video if you are so much talented already. So if you are anything close to learning how do we analyze the data, and what are different permutations and combinations that we need to analyze and keep our mindset ready for the day before the bell rings, here you are exactly at the right place where you can learn. And I'm sure I have done a lot of learning, especially in the last 2 years. All right. So if the market is opening here, I would certainly recommend shorting a put. And then again, if we again look at the monthly perspective, there is a threshold that we have already marked. That is 25,106 or anything close to plus or minus 20 points. So if the market is opening anything here plus or minus 20 points, stay or watch out for these levels, and I'm sure once this level is hit, then there will be indecision, or there has to be a new direction that has to be taken by the market, right? And the way it is going, I don't see there will be a long-term bullishness in the market at this moment. When I'm talking about long term, it is only 3 to 4 or a maximum 1 week's time, right? So at this level, stay cautious, and if there is any bearish position, or if you want to take a neutral stance, so you can always do that, right? But yeah, until this position, I'm sure there is a probability if and only if the market is opening neutral. All right, so now let's look at what happens if the market is opening gap up. All right, when I'm saying gap up, it is a minimum of 40 to 50 points. Now that Nifty is trading at 25,000 levels, so anything close to 20, I mean 0.2%, 0.2% also would be 40 50 points, 50 points. So if the market is opening gap up and immediately touching this level, I would certainly not recommend taking fresh longs in this position, because we have looked at the broader overview, because it is always about looking at what has happened in the past. If you look at what has happened this day, 24th, so peacefully Nifty has made a top, right here, right? It has made a top on 28th, and everybody was more or less looking at Nifty on a very bullish side. And then what happened all of a sudden is it has taken downtrend. If you look at it, I mean, we should not forget, or we have to be very much vigilant of what has happened, what are the very key levels. Otherwise, we'll probably not be able to make money on the long term. That's a different story. Okay, so what has happened on the neutral opening is over, and what will happen if it is a gap up opening? Watch out for these levels and stay a little vigilant to take any short side of the trade or neutral trade. It depends. At these crucial levels, it is very important to look for a candlestick pattern confirmation. I mean the price action confirmation. A minimum time frame is 15 minutes, and 1 hour's time frame is a bullseye, generally a bullseye on Nifty. right? So that's about what happens in the market if the market is gap up opening. And then now let's look at the very important aspect, which is gap down opening. This is very interesting for me tomorrow, if at all the market or the Nifty opens gap down, which is at least 30 to 40 points. I am sure it would certainly come to this level. When I'm saying this level, it is at least 924 920 to 24 960, because there has been almost 2 lakhs contracts that are on the long side of the game by the pros or the FIs. So we have to be very much vigilant, and if the market is opening gap down, come on boys, you can just buy calls, and then look for a very immediate, I mean, when I'm saying pros or the FIs or on the long side of the trade, the market has to move immediately into that direction, uh, because as the day or the time passes, there is a theta decay, that will come into the place. So if they had to be profitable in the trade, they will run the market very fast towards the direction that they are already holding positions, right? So if it is gap down opening, come on buys, it is your day tomorrow, right? So again, watch out for this level. If it is gap down opening, I would certainly recommend partial booking of profits in certain levels. It can be probably, I mean, if it is opening at 24,722, you can book some part here 840, 840, and then some part here, and then be very much vigilant here. And then if there is any short side trade confirmation that you're able to see, if and only if it is a gap down opening, you should be very much vigilant in this area to take a short side of the trade, right? So that's a little about it. I mean, earlier I always got comments from some of the viewers to you know talk about levels in particular instead of just talking about the data. Okay, and here I am talking about the levels, not just the data. So the data is just here. In any case, if you are looking for procuring this Excel as to try to understand what is the formulas, how did I arrive these numbers, you can probably comment in under the video, and then DM me. I'll be always available in any case if you're looking for education. All right, so it's my humble request, guys, please do subscribe and like, share this channel, and I'm sure I'll be motivated to do more content and share more insights as we move forward together. Yeah, thank you so much for staying tuned until this last moment. Have a great time trading tomorrow. I'll see you next time. Yeah, bye bye.